Folks, I'm going to talk about why some buyers can't afford to close. Then I'll get into the latest home prices and insights for York Region for week ending March 26, 2025. There are buyers that will buy, and then come day of closing, they can't afford to close. And if you're thinking, why are they buying in the first place? You're right. If a buyer can't afford to close, they shouldn't be buying in the first place. Sometimes the buyer succumbs to pressure. I'm not excusing this, but sometimes the buyer succumbs to pressure by the seller. Sellers are conditioned after so many years that a clean offer is the only thing I want to see. And buyers have also been conditioned that way. I've got to go in firm. By clean offer, I mean no conditions. So when the offer is given to the seller, there are no conditions. And if the seller signs acceptance, that's it. It's a firm deal, done deal. It's firm and binding. We're good. There is a fundamental problem with that, though. And I've always looked at it in a way that, how do we know this buyer can actually afford to close? I've received firm offers when I represented the seller, and that's what I'm always thinking. And my clients are often thinking, firm is better, no conditions is better. Well, look, if there's a home inspection condition, then there's an opportunity usually for the seller to rectify whatever problem there is. If there's a financing condition, the sellers have really no recourse whatsoever. The sellers really have no control over that financing condition, and that's why they don't like that condition. But let me put it to you a different way. Sometimes buyers, out of pressure of either competing offers, pressure from their realtor to put in a no financing condition offer, sometimes buyers feel that pressure from the seller that that's what they want to receive. Sellers many times will take a lower offer that has no condition. But I'm telling you, as a seller, you may be kind of playing into some of the problems that are happening there when it comes time to close, that the buyer can't actually close. For example, many times prices get bid up, and if the appraisal doesn't come in properly, the buyer's stuck. But they put in an offer with no financing condition. See, sellers see this as a negative. Let me, again, put it to you another way. Let's say there's a husband and wife, and the husband comes to see the home and likes it, and they put in an offer, husband and wife. The wife hasn't seen the home yet. Husband and wife put in the offer, and you know that the wife hasn't seen the home yet, but they buy it. And then later on one of the visits, the wife's coming to see it for the first time. I guarantee the seller is kind of biting their nails, hoping the wife likes the home that they bought sight unseen, because it'll be complicated if the wife doesn't like the home. Well, let's forget about the wife for a second as the partner. When somebody's buying a home, in most cases, they're not paying cash. They have a partner. The lender, whether it's a bank or some other lender, is the one that's putting in most of the money, actually. So you got the buyer and the lender, who I'm going to call it their partner. And the buyer maybe is putting down 20%, but 80%, the majority of the money is coming from this, we'll call it a silent partner, who still has a say. And if the silent partner doesn't get a chance to approve the purchase, that silent partner is not going to participate, and the buyer won't be able to close. Look at it that way. So if you see a financing condition, maybe you're thinking, I want it to be firm. I don't want the financing condition. But if you see a financing condition, rest assured that if you give the buyer the opportunity to actually check with their partner that's going to lend 80% of the money, or less or more, but around 80% of the money, that's going to put in most of the money, that their partner is happy. Their partner, the lender, is happy with the appraisal. Their partner, the lender, puts their stamp of approval. Then you, as the seller, can feel a lot more confident in the deal actually closing. There shouldn't be any financing surprises right at the last minute. But you have to be open to a financing condition. And in the end, I think it's better for you, the seller. There's another angle to this also. Today, with the way the markets are, and all the rules for lending changing constantly, it seems, banks are really stringent on who they lend money to, how much they lend, how they lend. You really want the bank part of the deal up front, not later on at the end deciding, wait a minute, the value is just not there in this house, or we're not lending money for whatever reason. At the end, it's going to hurt you. So be open to financing conditions. Maybe it seems up front that you got to, wait those 4 or 5 business days to really firm up the transaction. But after that, you can sleep like a baby, feeling more confident that the deal will actually close. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. And if you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video, in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, or go to tsre.ca. That'll take you to my calendar. Book a time and a date that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the York Region numbers. Here we go, folks. This show is all about York Region, specifically detached properties, the data for detached properties for Vaughan, Richmond Hill, and Markham. Prices are here right now. I've got 3 months here of average sold prices. Kind of looks like since the beginning of February, prices overall have been trending down. But let's look a little bit closer. We're going to start off with Vaughan for week ending March 26th. 28 detached properties were sold. 7 of those, I was going to say 2, 7 of those sold at $2 million or more. Overall, I would say sales are trending upwards, not by much. It's, we did 26 the previous week. Now we're at 28. But overall, since the beginning of February, sales have overall been improving. Average sold price is sitting at $681,000. So that's up from the previous few weeks. But overall, we were kind of high 1.6. And now we're, 1681 is high 1.6. But we've been hovering a little bit lower there. So I would suggest to say average prices overall are a little bit lower. But let's take a look at some of the other charts. Compared to last year, 1681 is 4% lower than the average price a year ago. The median price of 1650 is 2% higher. The dotted line, that's a 4-week moving average. And if we look at, say, the beginning of February, average price and median price, not by much, but gradually looks like it is trending down. Sales. The orange, that's this year's sales. The blue, that's the same week a year ago. We have far fewer sales this year than last year for the same period. And of the 28 that sold, 5 of those sold at list price or more. 5 is 18% of the sales. Listings. We have far more listings, this year versus a year ago. Active listings is much higher compared to a year ago. We have 468 detached properties available for sale. This is just for Vaughan. And if we look at the sales, 28 sold out of 468, basically 6% of all the detached listings sold for week ending March 26th. Months of inventory, same as the previous week at 3.9 months of inventory, pretty much a balanced market. Let's look at Richmond Hill. Sales, 6. That's it. 6 sold, no property sold at $2 million or more. Sales, sales looks like they're trending down. And when you got 6, 8, 10, 13, it's really tough to put a lot of value in average sold prices just because the sampling is so low. Well, average sold price for week ending March 26th, it's the lowest we've seen. It's $1,466,000. I don't want you to think your home in Richmond Hill all of a sudden lost a ton of value. That's just what the average price is of the 6 that sold for this week. Compared to last year, 1,466 is 23% lower. The median price is 19% lower. Median price is 1,471. Half of those, 3 of the 6 sold at list price or more. Listings, we have 470 active listings for sale. And months of inventory, because of 6 sales, is way up there at 8.1 months of inventory. Here's Markham. 23 detached properties were sold. 2 of those were at $2 million or more. Looks like sales are trending up, but it's not by a lot. It's not like sales are shooting through the roof. 23 were sold in all of Markham. $1,577,000 is the average sold price, which is way down from the previous week. It's really tough to say which way prices are going. It really is. Compared to last year, 1,577 is 6% lower. The median price of 1,460 is 6% lower as well. If we look at the dotted line, the median price since middle of February kind of looks like it might be slightly trending up. For the same period, the average price looks like it's kind of flat. Far fewer sales. 11 of the 23 sold at list price or more. 11 is 48%. 396 are available for sale. And months of inventory slowly coming down. We're now at 4 months of inventory. So we went from a top end of a balanced market to kind of like the middle of a balanced market. Here's a quick summary. You're going to experience, in most cases, a balanced market. And even though Richmond Hill is way up here at 18.1, that's not, it's not realistic. Pretty much a balanced market when it comes to detached properties in, in Vaughan, Richmond Hill, and Markham. Thanks for watching. Have an awesome day.